Welcome back to Navigate Your Wealth. My name is Cynthia DeFazio, joined today by Karen Stawicki and Samantha Irish of Compass Financial, and we're talking all about the importance of proper tax planning for your retirement years. Samantha, let's talk a little bit more in depth about some of these ways to mitigate the tax burden, if you will. There's so much I want to say, I got to get it out there. It's okay. I know the feeling.
You know, it's such an interesting thing because when clients come to us, I think a lot of times they believe that they're being tax focused or that they're not ignoring taxes, right? Most CPAs are working with their clients, who also become our clients, to help reduce their taxes. The problem is that reduction is an immediate gratification, right? They're thinking about the ways that they can make a contribution to their 401k or contribute to an IRA to reduce their income today.
Yeah.
Unfortunately, by focusing on today and only today and not thinking about the future, they're actually making the situation worse. So for us, we always have the conversation, is it better to pay on the seed or to pay on the harvest? And truly, we believe that it's both. And each individual situation, which is why we customize our suggestions and our recommendations to our clients, because we want to make sure that it fits you and your needs. But the thing is that there are so many proactive tax favorable ways that think about the longevity and not just today.
Okay.
So some of the things that we like to focus on is Roth IRAs and cash value life insurance.
Okay.
So Roth IRAs have so many benefits for the long term.
Okay.
The problem is that with a Roth IRA, there's some limitations that are around it. Right now, there's the contribution amount. There's also the age limitations around it, and you have to be working. We like to say that the cash value life insurance is like a Roth IRA on steroids because there's so much more flexibility to it. You still have the same tax advantages, but you also have a lot more control over the asset.
Okay.
And control to those dollars. And so when we talk about having control to those dollars, it gives us an opportunity to share client stories, which I know Mom has one that she's dying to share, about how our clients are able to save a bunch of money and be able to have access to those tax-efficient dollars.
Amazing. Well, let's talk about that client story, Karen, please.
Well, absolutely. Well, this client came to us from our TV show, and she had been doing a wonderful job of saving, and she knew she was doing a good job of saving. She made a lot of money. She made $800,000 a year, and she had a couple $1 million in her 401k and said, I can give you $200,000 a year for the next 4 years. What can you do? Well, I thought, what could I do? You've given me some good assets to work with. But we really sat down and looked at what she had, and she did not understand a couple of things. Obviously, with the power of three, job descriptions of money. So we went through that. When we showed her how to create the guaranteed income she needed, but then secondly, focused on the tax mitigation, that $2 million that was in her 401k was completely taxable. And, you know, when you're putting it in there and you're getting the deduction and you're seeing it grow and you're not having to file any reporting on it as it grows, you think it's all yours.
Of course.
But it's not. And in the one section that we looked at, she had $1.6 million. And I'm sorry, $1.4 million. That's right, $1.4 million. And we did the tax burden analysis, which if you want to know if you have assets in an IRA or a 401k, and you want to know if you can see what your number looks like, I think they're going to put the code on the screen. It's www.navigateyourtaxes.com. You click on that QR code, you're going to be able to go right to the site and run these numbers. But we ran these numbers for this client, and her $1.4 million IRA, she had two choices. She could either kick the can down the road, which is the government's plan for her, and she would pay $1.6 million in taxes over her lifetime.
Oh my gosh.
I know, it's mind-blowing. That's, Or through doing strategic Roth conversions, she could pay $500,000 in tax.
No brainer. right?
But here's the thing. $500,000 is still a very big number.
It is.
And in her case, we were going to do it over 5 years. So she's going to write a $100,000 check to the IRS 5 times. That is painful. I understand. But when she realized that 1.6 versus 500,000 was $1.1 million less, the choice was obvious.
Absolutely.
And I will tell you, when you run that tax burden analysis and you see the big number and compare it to the smaller number, the difference is optional tax.
Wow, that
It's
is
optional
incredible.
tax because you opted to take that plan. Now, here's the best part of this whole story.
This is amazing.
This client, when she retires, because of the way that we set up the next conversion of the last bit of the 401k that she'll accumulate, which she's now contributing to the Roth side for her money.
Okay.
Okay. 100% of her income when she retires is going to be tax-free. That also means that her Social Security will be tax-free because
my
she will have
goodness.
taxable income of 0.
That's incredible.
100%
Yeah.
tax-free. She was thrilled. And she referred us to 6 more people.
I'm sure she did. That is amazing.
Yeah.
Look at the way that you are both changing lives. I mean, it's amazing. All of the stories that you share, people just by picking up the phone and calling in have scheduled time with you, and you're really getting to know them one-on-one, their personal stories, their information, and you map out a plan, all with the power of 3.
You know, we wrote this book because we wanted to make sure that people understood that they had options.
Yes.
It's so sad to me, and I don't think that advisors are keeping this a secret because they want to penalize you or hurt you. I just think that that's not where their focus lies. And the accumulation stage of your assets and the distribution stage of your assets are so vastly different. But when we look at the distribution, that's your retirement. That's what you worked so hard for.
Yes.
So we want to make sure that you have the most spendable income in those years, not whatever the government leaves you. Right?
Absolutely.
You know, when we give her the option between having $1.6 million in taxes, the reason that she has $1.6 million in taxes is because she chose the government's way.
Yeah.
And let me explain what the government's way is, because a lot of you at home might actually be doing the government's way. It's you don't need the assets every single day. So I'm going to defer them until I have to take them for my required minimum distributions. So you defer the money. Well, every year you defer the money, it grows, fingers crossed. Well, if the money in your IRA is growing, it's not just growing for you, it's also growing for the IRS.
That account is a joint account with the IRS.
Yes.
It really is. And people don't understand that.
An IOU
An
to the
IOU,
IRS,
that's
is what
right.
it is.
Which means that the amount of tax is growing.
Yes.
And so that number is deferred. Then you take the money out, and as you're taking it out, you're only taking the RMD, so you're only taking a little bit out of the account.
Right.
So it's still growing to keep growing the tax.
Wow.
And then if you pass away and there's assets that are left in it, when it gets distributed to your heirs, it's still taxable.
That's right.
So now what would hopefully be a wonderful gift to your family gets to be a little less of a wonderful gift to your family.
Yeah.
That's the government strategy. I'm not a huge fan of the government's plan most of the time. And when do they ever do things for our advantage and not theirs? The RMD strategy is actually designed for them.
Well, I'm so glad that you brought up about passing down to your heirs, because obviously, Karen, without proper tax planning, you're talking about a lot of people receiving funds, let's say from the loss of a parent. They could be in their high-end working years.
Exactly.
And so wouldn't that potentially bump them into another tax bracket?
Well, absolutely. And you know, with the Secure Act, they stretched it, or they changed the stretch for your lifetime to 10 years. But let me tell you, if you convert your 401k or your IRA into a Roth IRA, here's the ticket that you need to understand. When you pass, your children may take the money right away, but assuming that you told them not to, they actually have the ability to keep that money, based on today's current laws, in that account for 9 years. They can keep that money in there growing tax-free for 9 years, Cynthia. Now, in the 10th year, they have to pull it out, but it's 100% tax-free.
Wow.
And what an amazing gift to be able to give to your children, to say, I set this up in a Roth IRA, I've paid all the taxes, there is no more debt to the IRS that you kids have to worry about.
Wow.
This money is 100% yours. I suggest you let it grow if they still allow it, and then when you have to take it, it's still tax-free.
And now that is truly a gift.
That is truly
when
a
you
gift.
think about it.
That's right.
Well, Samantha, you and Karen have a very special offer to present. Let's talk about what that is before we reopen the phone lines.
We want to make sure that you know your lifetime tax burden. It's not about 1 year, it's about what you pay over your lifetime. Could you have $1 million that you get to keep and not give to the government?
That sounds
We
good.
want to help you
That is
find
good.
out. Go visit our website, www.navigateyourtaxes, and run your own tax burden analysis. Or better yet, pick up the phone and let's sit down and have a conversation. We want to make sure that you are given the retirement of your dreams, the retirement that you worked so hard for by keeping more of your hard-earned dollars.
Samantha, thank you so much. Karen, thank you so much. To our viewers at home, that number to call is on your screen, 855-348-3073. You've worked your entire life to get to the retirement years. You deserve to have peace of mind. You deserve to keep more of your own hard-earned money. There's a way to do so with proper tax planning for your retirement. All you have to do is take advantage by calling in today. 855-348-3073. If you don't have a pen handy, that's okay. We understand. You can grab your smartphone, click on that QR code at the bottom corner of your screen. That will take you right to the landing page for Compass Financial, and you can claim your spot accordingly. Don't you deserve it? We think you do. We'll be right back after this very short commercial break about how to keep more of your own money in retirement. Stay tuned.